Hello folks, this is Nate Paulson from Paulson Wealth Management with an educational economic update for October 2016. In this month's video, we'll discuss some of the events that influence markets in September and help you understand what they could mean for you as an individual investor. Please stay tuned at the end for a required disclosure statement. The third quarter ended in volatility for U.S. financial markets. After a sleepy summer with historically low volatility, markets became more turbulent in September. So let's talk about some of the headlines that drove market movements last month. The Federal Reserve was again the source of much of the speculation and volatility. The central bank met in September to vote on interest rate policy and decided not to raise rates again. That left the door open for much more speculation about when they would raise rates. So the Fed is in a tough spot right now because it needs to bring rates higher to avoid an overheated economy. But at the same time, the central bankers also need to be careful not to raise rates too soon or too fast, or they risk hurting the economic recovery. The data right now looks pretty good, but the Fed knows that there are still other risks out there on the horizon. So what comes next? It's not likely that the Fed will raise rates at the November meeting when the presidential election is still a political factor. So that makes the December meeting very important. Wall Street thinks the odds of higher interest rates after December are over 60%. Interest rates have complex effects on the economy, corporate profits, markets, and consumer finances, which is why investors care about where rates are going. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of the year. The third release of Q2 economic growth data shows that the economy grew 1.4% in the second quarter. While growth is below trend, economists expect to see stronger growth in the third quarter. Two unofficial projections of gross domestic product show that the economy may have grown 2.2% in Q3. However, forecasts have come down steadily in recent weeks, and it's possible that the official growth numbers could disappoint us when they come out. What can investors expect in the coming weeks? Well, to put it one way, volatility and more volatility. Markets are grappling with a lot of uncertainty, especially ahead of the November election. We also know that the Federal Reserve wants to raise interest rates this year. On top of that are concerns about oil prices and Britain's exit from the European Union. Overall, we can expect markets to remain uncertain until these important questions are resolved. As always, we'll keep you informed as the news arrives. But that's it for this month's educational economic update. Thanks again for watching. This is Nate Paulson with Paulson Wealth Management signing off for the month of October 2016. Please remember that nothing we talk about here is a recommendation. So if you'd like to discuss your personal financial situation, please give us a call at 630-517-2950 and we'd be happy to speak with you.